Hello, and welcome to the Retirement Benefit Plan, an introduction to Exposure Draft 82 webcast. My name is Dave Warren. I'm the Deputy Director of the International Public Sector Accounting Standards Board. This webcast will provide an overview of the key proposals in Exposure Draft 82. You may also find helpful the at-a-glance document available on our website, www.ipsasb.org. That's www.ipsasb.org. What I want to focus on in this webcast today are really three main areas. I'll spend a little time up front going through the background of this project, and I will probably spend the majority of this webcast focusing on the background because the reason why the IPSASB took on this project, I think, is extremely important. I'll next move into some of the key proposals and talk through the four proposals that were made in this exposure draft. And then I'll finish off with next steps and how you can respond to this Exposure Draft 82. The reason why the IPSASB moved forward and took on this project really goes to the fact that in the public sector, retirement benefit obligations can make up a very significant current liability for public sector entities. In some cases, because there's no existing guidance on how retirement benefit plans should account for these retirement benefit obligations, when a government consolidates its accounts, it is possible that the consolidated retirement benefit obligation may be omitted or missed or not be there in its complete format for decision makers to make the appropriate decisions going forward on how to manage these accounts. Because of this gap that exists in the IPSASB's current literature, the IPSASB felt it was extremely important to move forward this project and fill this void to ensure that the appropriate decisions can be made and complete information is available. The reason why this is so important is because retirement benefit obligations are often funded with future tax revenues. So as a result, it's very important from a public financial management perspective that the complete obligation is available to those that are making decisions on the sustainability of the plans themselves at their fingertips, and the information is available so that the appropriate decisions can be made. Now, the reason why this gap can exist as it relates to the obligation being complete at a consolidated level is in the public sector, it's not uncommon to see a number of public sector entities join together and create a retirement benefit plan. This retirement benefit plan will manage the obligation for the employees of each of those entities. Now, the reason why this gap in obligation can exist is because existing guidance in IPSAS 39 employee benefits allows each of those individual entities the ability to present a defined benefit obligation as a defined contribution obligation at the specific entity level. However, when those obligations are consolidated, that might not represent the true obligation from a defined benefit perspective. And as a result, that really relates to and goes back to the reason why the IPSASB wanted to develop guidance for retirement benefit plans to ensure that that obligation was complete and accurate. When going through the key proposals, it's important to note that the IPSASB determined a good starting point for this exposure draft were the requirements in IAS 26, accounting and reporting by retirement benefit plans. That is the private sector guidance that was developed by the IASB. When going through IAS 26, like all projects of this type, the IPSASB ensures that the public sector uniqueness and factors that should be considered from a public sector perspective are considered and reflected in what's proposed as an IPSAS. The first key proposal that I wanted to go through relates to the location of the retirement benefit obligation. Going back to the background and why the IPSASB took on this project, one of the paramount concerns of the IPSASB was to ensure that the retirement benefit obligation was front and center. And the IPSASB was of the view that this was one of the most important captions to users of the financial information, as this represents, as I noted, it can be a very significant obligation for a government or a public sector entity in general. As a result, the IPSASB made it clear that in ED 82 that the retirement benefit obligation is required to be on the face of the financial statements. This makes the information readily available to users and presents it in a way that the users can see the assets also available when they are available to offset the obligation to satisfy retirement benefits. The second proposal relates to the requirement to measure plan assets at fair value. As noted on the previous slide, in some cases, the retirement benefit obligation will be offset by assets or investments that are there to satisfy the obligation when they come due. In some cases, the plan will be fully funded or overfunded. In other cases, the plan will be underfunded. Regardless of the circumstances, the IPSASB felt it was extremely important that these assets and investments be measured at fair value. This represents the relevant value to users of that financial information, represents the current value of the assets that could be received should those assets be disposed of immediately. This also aligns guidance with IPSAS 39, employee benefits, and financial instruments IPSAS 41 to ensure greater consistency throughout the IPSAS suite of standards. The third proposal relates to the use of projected salaries. Going back to the retirement benefit obligation, as noted, the IPSASB saw great importance in this number. And as a result, they wanted to ensure that the most accurate number and most complete number was determined. And what the IPSASB ensured in ED 82 was that when determining what the retirement benefit obligation was, specifically for defined benefit obligations, the requirement was that you had to use projected salaries as opposed to current salaries. And again, this just returns to the point that using projected salaries was a better estimate of what the obligation would be when the obligation had to be settled in the future. The final key proposal that I wanted to cover was in ED 82, the proposal and requirement that cash flow statements also be included in the financial statements of a retirement benefit plan. This, similar to previous proposals, ensures that there's consistency throughout the IPSAS suite of literature. Requiring a cash flow statement aligns with the requirements in IPSAS 1, presentation of financial statements. And it also allows users to see the actual cash outflows as opposed to the what's shown in the financial statements, which is prepared on an accrual basis. Moving into next steps, a few key points that I really wanted to cover. First, in the exposure draft, there are a number of specific matters for comments. Respondents are asked to respond to all of them or those that are appropriate to the responding entity. All respondents will be taken into account when analyzing responses. Comments are due by August 1st, 2022. You can submit a comment by visiting the IPSASB website and submitting a comment on the IPSASB page. You can also stay informed by visiting the IPSASB website. You can read our emails and quarterly e-news, or ideally you can register online to be an observer at one of the quarterly IPSASB board meetings. Thank you very much for your time today to attend this short webcast. I hope this webcast helps you formulate your response. Thanks again, and I hope you have a great day.